QuickBooks Pro Plus Desktop 2022 OneNote presentation, bank reconciliation month number 1, checks and cash decreases. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introduction 9080, bank reconciliation month number 1, checks and cash decreases tab. Also take a look at the immersive reader tool, topic introductions in the text area too, with the same name, same number, but with transcripts that can be translated into multiple languages and either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're looking at the bank reconciliation. Last time we ticked and tied off the deposits. This time looking at the decreases, starting off with the balance sheet, comparing what's on the balance sheet with regards to cash as of the cutoff date of the bank statement, in this case, January 31st. And it's not tying out to what's on the bank statement due to the fact that we're most likely going to have outstanding checks and deposits, those being the reconciling items. If you go into the banking drop-down, bank reconciliation, we're going to be choosing the checking account. We've got the month end of January 31st, the beginning balance, which isn't tying out at this point in time to what's on the bank statement. That's often an issue that we're going to talk about later. And then we had our ending balance, which is coming from the bank statement. And then we process forward. This is our mock bank statement. This is what we're imagining is coming from the bank, which has our summary up top, beginning balances, additions, and then subtractions to get to the ending balances. The beginning balance isn't tying out, but we're not worried about that at this point in time. We're going to look at that later. The additions tied out because we tick and tied those off last time, so the cleared additions we have ticked off, and that looks good. Now we're looking at the subtractions, noting that when we look at these subtractions, that it could be, we have different kind of difficulties with the decreases. If we write checks, then we've got the check number to help us out to verify, but the date is going to be less relevant because if we wrote checks, it takes longer for the checks to clear. So unlike with the deposits, which it might be like 1 to 3 days, with the checks, if you actually wrote the checks, then it could take longer and the date's going to be less relevant, but you got that check number. If you do electronic transfers, then you don't have the check number, but you have a date like with the deposits that should be more relevant. It should be closer. We're going to enter information into our system, so the date's going to be sooner than it cleared the bank, but it should be closer in time frame, and we might have some other detail that could help us out, like the transaction, detail in terms of the bank memos, which could include, say, vendors involved in it. So same kind of thing. We're going to go from our bank statement, and then we're going to tick in and tie it off to what is in our books and the bank feed information, and just tick and tie them off one at a time. We should be able to find everything given what we have here, the dates as well as the check numbers and the amounts. We don't have that same kind of grouping problem typically we have with the deposit side of things. So, it should be straightforward to find them, although we typically have more decreases than we do with deposits, at least in terms of amount of transactions, hopefully not in terms of the largeness or size of the transactions. So we're going to be going from the bank statement to the books, because if it's on the bank statement and it's not on our books, then that's probably something that we're going to have to add to our books from the bank statement, unless the bank is wrong, which is not typically the case. And then if it's on our books but not on the bank statement, we expect that to happen at least a couple times generally, because we might have written checks that have not cleared the bank. Those are going to be the uncleared transactions that are going to be the reconciling items that will be used when we generate the bank reconciliation. So we're going to go through this whole thing, and we're going to tick and tie everything off to what is in our system. Notice that we have these 3 items or 4 items here that we didn't tie out. These 2 items up top are going to deal with that beginning balance problem. You'll recall our beginning balance was off by 5,000. We had 25,000, and then it was off by that 5,000. And then we got these mysterious items that cleared the bank that aren't on our books. What could those items be? Most likely outstanding items as of the last bank rec that was there before we entered into our current accounting system. So we'll talk about that issue later. That's what those 2 things are. So these aren't wrong, but they're also things that are dealing with the beginning balance issue with the first bank reconciliation that you might run into this problem. And so we'll talk more about that later. And then we got these two items down below, which are things that we didn't enter into our system, but they're on the bank. And one common one is the bank fees and charges, because the bank just charged us whatever they're going to charge. Unless we're going to complain about it, then we're just going to have to add that to our books. We're going to add that to our books and then check it off. And the withdrawals would be another one that we might not add if we just took a cash withdrawal. Then we'd have, and we didn't put it into our books, well, then we got to add it to our books, unless we're going to say the bank is wrong. So we're going to fix our books with these two. We'll fix our books with these two, but it's a different issue that will only be there really with that first bank reconciliation. Then you won't have that problem. Then we have these items that were not checked over here, and these are not a problem. That doesn't mean that we're wrong. Doesn't mean the bank's wrong. It means that the bank doesn't have the information to process those yet because there's a timing difference. They haven't cleared the bank. We could double check these items by checking that they cleared the bank in the following month, which they should most likely. So in February, we would expect these items to basically clear. And if they do, that's good. And then we could just use them as our reconciling items. The ones that are not checked would be the undeposited or outstanding checks and outstanding deposits over here and over here. Those are going to be our reconciliation items, the important components of the bank reconciliation, which will be created when we hit this button, when we're finally done with this, and generate a bank reconciliation report. Those will be the outstanding items. So then we're going to have to add those two items. So we're going to add the 150. We're going to put that to miscellaneous expense. That was this 150 here. Now be careful when you're drawing money out, or if you're working with a client that draws money out. We would like to put that into, say, draws. We'd say, hey, anytime you pull money out, make it a draw, and we'll put it there. But they might say, no, it's an expense. I used it for business, and we don't know what expense account to put it into because it was just cash. So be careful of cash withdrawals for business. You want an audit trail typically if it's a legitimate business expense, because that helps you out with the audit trail for like taxes and whatnot. But we're just going to put it into miscellaneous expense here. Next time we'll put it into draws, and we'll see the difference between the two. And then we can go back in here and just check that one off because now we've added it. And we'll do the same thing for the bank service charges on the 15. We'll just add that to our books. We'll just fix our books because it was on the bank statement, not in our books, and the bank statement's not wrong. So we have to fix our books. And then we'll check off the 15. So once we do that, we'll only be off by these two items, which is that beginning balance issue, and we'll deal with that next time.